We're going to record this as well. We're going to make sure it's up on our website for everybody who can't join us. But we are going to talk about today reviewing 2020. We've noticed we've been tracking performance throughout the year, and it's been a topic that we've touched on throughout a number of shows and in our communications with our clients. But looking at performance within asset classes, it's not all green. It's a lot better than it maybe was to start the year or in the earlier part of the year around February, March, but not all the same performance. Another topic that has been widely discussed, but it keeps becoming more and more critical, I think, to talk about is the difference between the market and the economy. While the market is performing well, maybe the economy isn't as doing as well. I think there's reason to be optimistic, and that's where we're going to hope to maybe wrap things up. Lisa will play her usual pessimist and maybe combat some of my ideas, but let's go ahead and jump in. So taking it back, I think, to the beginning part of 2020, it's been a crazy year, especially if you've been invested in the markets like most of our clients are. We started the year off with, we're probably up around 5% or so, maybe around that neighborhood. Then we got news of coronavirus slowly trickling out of China. There were people that took it seriously. There were people that didn't take it very seriously. It ran the gamut of what you might expect. We thought it might be similar to SARS back in the early 2000s. We weren't sure it was going to be the extent it was. But when things became clear in early March, the market fell off a cliff. We were down about 35% on the major stock indexes. And at that point, we bottomed on, I think it was March 23rd. That was the last day. Then we rallied. We went up, I remember, 9% on the day after March 24th. And people across the financial industry were saying, markets don't bottom on huge up days. There's usually a huge up day and then another leg down. So that, in fact, was the bottom. From there, from about early April, we rode an incredible stock market recovery, back up 60%. This confuses a lot of people. So maybe we'll touch on it a little bit, but if you decline 30% and then go up 60%, you're not back at 100%. So if you take 100 minus 30%, that takes you to 70%. 60% of 70 is, I don't know, a little over 42. 30. Yeah, 42%. So there we go. So we're not all the way back quite yet, but recently we've been bumping around, the election lead up news. And just today we are with the news of the vaccine coming down the pipe. We've crossed an important threshold in the Dow just before we came on, 30,000 on the Dow Jones today. We'll see where we finish today, but that is a big milestone, I think. Numbers, we'll say what it is, but numbers on the Dow, that gets some headlines. I know it's just an arbitrary point on the point scale, but 30,000, we'll be sure to hear about that on the evening news tonight. So I think that is where we are, where we've been, and where we are right now. But Lisa, why don't you tee up? Maybe it's not all green as we look across, maybe dig a little deeper on what our clients might be seeing on their investment statements.
Yeah, and I just want to add for those who are maybe a little more of my age, this is what Bridging the Gap is all about. I remember when the Dow hit 2,000 and when it hit 10,000. And so this 30,000 honestly just doesn't even seem real to me at times. When I think back to when I first got into the financial services industry 35 years ago, we were at like Dow 2000.
I think that's a good analogy for why you should invest, right? Like your 401k starts out at $2,000, and if you keep putting money into it, it's up to wherever we might find it when you retire.
Yeah, and this has been an interesting year because there are always years where being a well-diversified investor, stocks, bonds, U.S., international, doesn't seem to be paying off as well. And 2020 is definitely looking like one of those years where it's been hard to know where to be invested. Now, it can seem like a no-brainer. Hey, I should just be in the U.S. stock market, or more specifically, I should be in those top 5 FANG stocks if I really want to make money. But we know when we look back over longer periods of time, in fact, technology hasn't been the place to be, or growth-oriented stocks. It has been more of those dividend-paying, value-oriented stocks. And what's been fascinating that I've been watching all year is the spread in returns between large cap, that's large company, growth style, which tends to be the technology stocks, the ones that are more growth oriented without necessarily having a dividend, and then the ones that are what we would call value style, which are the more dividend oriented stocks. That spread right now, at least as of Monday, was about 34%. So in other words, the growth side was up 26% for the year. And by the way, to give you a reference point, the S&P 500 was up 12% for the year at that point. And the value stocks were down 7, almost 8%. So there's a 35% spread. So if you were in the growth side of the US markets, you've had a spectacular year. If you were in those dividend paying stocks, oil stocks, pharmaceuticals, minus the ones that are involved with vaccines, it's been pretty tough sledding. And then farther, if we look at large versus small company stocks, we have a similar type of spread. So when we go down to look at small company stocks, which by the way, are always negatively impacted in a recession. And we have had a recession. We're certainly recovering. We're going to go back and forth about that in a little bit. Small company stocks, small businesses take a hit. And so when we look at small company growth stocks, they were up, at least as of Monday, about 10.5%. Small cap value was down about 7%. And so there's about, again, there's a 17% spread there. But you can see that hasn't been like being in technology stocks or being in the large company growth stocks. And then when we look at international, the good news is for those of us who are well diversified and have been invested in international all year, we're finally seeing positive returns. We've spent most of the year having negative returns in emerging markets and in international. And right now, emerging markets are outpacing developed international companies. So again, go figure. Some people believe that's because the emerging markets tend to follow the US stock market. But, and is it because China has had a better response to the pandemic, is really already in recovery? There's a lot of different reasons, but this is a great example of trying to guess where to be is pretty hard. And if you were thinking, hey, tech stocks are the way to go, the rallies have been coming in the last 3 months significantly from the small cap and the international side, not from the technology sector.
Well, it wasn't until recently, even. It's much shorter than 3 months. I think really since we got the vaccine news,
Yep.
We've seen a big bump up in these companies, small cap companies that have gotten just destroyed by the virus and the shutdowns.
Yeah, so it's tricky to know where should you be. And, I think investors and certainly investors who work with advisors like us think we should be moving around trying to guess where to be. But I think we both know, and certainly from my long-term experience, trying to guess that, you always get it wrong. When you think this is the place to be, it's the opposite. You should be somewhere else. And so the reason this is important is as we get to the end of the year and you're looking at your 1231 statements, I mean, God knows what the returns are going to look like by then, but you've got to take into account the diversification you have in your portfolio as opposed to expecting to get returns following the S&P 500. And what we already know, Jared, you may have the statistic, is that even if we pull out the top performing 5 or 10 stocks out of the S&P 500, we may actually even be looking at negative numbers, right? Or maybe slightly positive at this point.
Yeah, I'm not sure. So much has changed since we got that statistic. I think a lot of the growth throughout the year had been really centered around, the Facebook, Amazon, Google, Microsoft, those 4 or 5 companies that have really fueled the growth for this year weren't impacted by the pandemic or social distancing. So they really had the opportunity to grow and expand, maybe put some of those small cap companies out of business. We'll see where things shake out as a result. I think we've been talking about not really understanding the long-term impacts of investing as a result of coronavirus just yet, but the there's no free lunch in that. I like saying there's no free lunch in investing. Diversifying your portfolio is as close as you can get to having a free lunch. I think it's to illustrate that point. There have been small value. What Lisa just talked about has been one of the worst performing asset classes. There's literally been a Nobel Prize in economics won by Eugene Fama and Kenneth French, saying that historically small value stocks will outperform over time. And that's not, maybe that's true looking back. If you invest how things have performed historically, we'd all be invested in probably railroad stocks still. But looking forward, I'm not sure how this is going to look.
Well, now, Jared, I'll put my chief compliance officer hat on, just saying, now past performance is no guarantee of future results.
That's what I'm saying. We don't know.
We really don't know. But, I think this is a good time to pivot to this whole conversation about the economy is not the market, or the market's not the economy. I know that for many of our clients, this has been a head scratcher since March, where we saw that big recovery in the stock market, and have watched, tens of millions of people still unemployed, lots of gig workers still struggling. Certainly the hospitality and travel industries are really still decimated. And a lot of, and the aid is, unemployment aid is ending at the end of this year, and we don't have any more stimulus. And was just on the phone with a client who owned a number of restaurants and has had to declare bankruptcy on most of those businesses, has one left, and has a very short run rate. If they don't get some more PPP money, some stimulus, they're going out of business. And so, to your point, I don't think we've seen the end of this, but it can feel really confusing and frustrating when you know all of this negative piece, and yet you see the stock market hitting 30,000 on the Dow today. So I'm curious, your thoughts on that piece.
Yeah, I mean, we've always said that the stock market and the economy, they're closely related, right? But they're not tied to each other. Just because the stock market is going up does not mean the economy is doing well. It's an interesting year, I think, for the fact that so much of the stock market, or the indexes that we look at to judge performance on our portfolios, are controlled by a handful of companies that have made the stock market look like it's performing better than if you dig deeper. Some of that is changing. The stock market is forward looking. So we've seen a number of items, recent headlines come out. The biggest one of which is we've gotten 3 vaccines that are 90+% effective, which is pretty big news. I think the flu vaccine is 46, somewhere between 40 and 60% effective given the year. So the science is very encouraging. I think there's a light at the end of the tunnel that has maybe amplified the stock market performance in the last 2 weeks. The election, I think, will, if anything, I think the results that we know so far will give some, perhaps maybe a little more certainty around, less uncertainty, I'll say that, about what is going to come out of the executive branch. We're still waiting to see where the Senate finishes to get a better indication of where things are headed from a policy standpoint. But I think we can safely say we'll have some more certainty, maybe return to business as usual from what we expected before the Trump presidency. So I think that is giving some people. And then, yesterday, Janet Yellen, former Fed chairwoman, was named Secretary of Treasury, or not officially yet, right? But it looks
pretty likely. That's who they're going to put up to nominate.
Right. Yeah. So I think that's all. Those are all headlines that have fueled further growth, and that just is a long-winded way of saying the stock market is looking forward, seeing some of these headlines that are coming out and making guesses. And that's all really investing is at certain points, is educated guesses about where things are headed.
Yeah, and I think on the economy piece, so there's some things, at least what I'm reading. I think Citi came out today, their economists came out today and said that, as this vaccine rolls out, that we might see a 0.7 increase in the economy next year, but the real benefit is coming probably in 2022. I mean, we know airlines are saying They think they're going to permanently lose 15% of business travel because, who needs to get on a plane now? Just heard that from another client today, an attorney who said, hey, I'm not getting on a plane unless I'm forced to by my employer. And, there's going to be a lot of businesses that decide also that they can save some money, and then maybe they can save some money on real estate as well. So I think there's a lot of the economic impact to be played out, but it is really important, to your point, to understand that the economy, the numbers we get from the economy are lagging indicators, and the stock market is a leading indicator. And so there's going to be a disconnect. Also, to your point, I think with the now that we are officially beginning the transition of administrations from Trump to Biden as of yesterday, all this is hot news off the press. I know that the markets feel good about that, and that creates stability. As we know, the stock market does not like surprises. I do think what can happen with the stock market sometimes is that it gets too excited, too positive, too optimistic, and then there's some setback. I mean, we're bound to have setbacks with the vaccines. Maybe not. This is going to be different. It's a different kind of differently created vaccine. So maybe we don't have some of the problems we've had with massive vaccination efforts in the past. But there's probably going to be some setbacks. If we cannot get stimulus before the end of the year, which I'm not sure even with this transition happening now, we can. There are businesses that may just decide they're closing down at the end of the year and they're not even going to try to make it into next year. And so, I think there's still a lot of pieces here where we need to be prepared for some continued volatility in the stock market. You just never know. We didn't expect this, right? When we came into 2020, I had been worrying about the markets going down more than anybody, but did I know it was going to be this? No. And so we never really do know, right?
Yeah, I mean, you turn on any financial media, financial news, CNBC, there's always one guy or two guys saying, they're always calling for a correction. You only get credit if you said global pandemic, though, for this year, I think. But yeah, there's always people out there calling for the sky to fall. I think looking forward, one of the important factors that we need to be paying attention to is how effective is the government in distributing the vaccine, and how effective are we at getting people to take the vaccine. John Delaney, a former presidential candidate, had an interesting idea. He was on Twitter last week. I don't know if you saw, but he had the idea, let's pay people to get this vaccine. Let's give them the $1,500 from stimulus if you get the vaccine. And I thought that was an interesting idea. I don't know if that will actually happen, but it's one way to incentivize people.
Well, I think we've got to have some of those ways. And you look at what Europe is doing there. I think very interestingly, they're doing massive testing while they wait for the vaccines. I mean, like whole counties, cities, actual countries are getting tested so that they can open a little bit back up around the holidays. My guess is if they're doing that on testing, they'll do the same thing on vaccinations. And it'll be interesting, because it may be that if Europe can do that, they've got their kids in school. They sent all the adults home and left the kids in school, which has allowed them in some ways, I think, to manage some of the economic issues. They've also been continuing to throw money at their citizens. So it'll be interesting to see the different political strategies that are played out around testing, vaccination. Do you put kids back in school, economic incentive? Hopefully we're going to get to a situation in this country where we will have a standard approach to the whole thing going forward, as opposed to leaving it to all 50 states, because that's confusing, hard to manage. We all cross state lines on a regular basis. So, certainly my fingers are crossed that we get some more organized and coordinated policy going forward.
Yeah, I agree. So I think a good place to maybe wrap things up might be, I've got some ideas around why we might be optimistic, and I know that always makes you a little nervous, but maybe you can combat some of my ideas and tell me the devil's advocate reason why maybe we shouldn't be as optimistic. But looking forward, I think that's important into 2021. one of my first reasons to be optimistic is I don't think it's going to get as bad, despite what happens with the virus in the next month or so. I don't think economically we're going to go back to a nationwide shutdown to the extent that we saw in March and April. We know that did not work. So I don't think we're going to shut down wide swaths of the economy like we did previously in the year.
Well,
that's my first one.
Yeah, so what I'd say to that is, yeah, you're probably right. I do think we're going to see cities, states, and counties make different choices, more targeted or strategic. Stepping down is, I think, the term that you hear a lot of the folks in charge in various governments. The other thing is that I think we're more adept at managing the lockdown lifestyle and the holidays. If you can buy most of your stuff online for the holidays, there's still an economy to be had. And we know that we have a consumer driven economy. So, I actually wouldn't necessarily argue with you on that one. But those are some of my reasons why, I'm hopeful, is that we've learned something, we can be more strategic, and we've gotten a lot better of living online.
All right. Point for the optimist.
Okay.
We'll call it that.
Fair enough.
Next one, I'm going to say that looking across the average consumer, I think that their balance sheets, personal savings rates are far better. If you look at some of the data, are far better than they were heading into this, which is kind of, confusing. So if you look at what people use their money that they got from stimulus when they were still getting stimulus, a lot of people paid off their credit card debt. Credit card debt is way down. It's still a problem. It's still always out there, but credit card is way down. The savings, there's statistics that look at how much people have in their savings accounts. It's crossed $1 trillion for the first time. And you talk about pent up demand, that's going to be a term we're going to hear a lot of as we move into the warmer weather of 2021. There's pent up demand for travel, vacation, going to Disney World with your kids. So I think if everything goes well on the vaccine side of things, that's a big question mark we've already talked about, but I think there's a lot of pent up demand and the consumer looks well positioned for that demand.
So yeah, I'm going to take a little bit of a contrarian view on this. A couple of things. Some of that money came from stimulus, and no more stimulus has shown up. People have been robbing Peter to pay Paul, so to speak, I think, to get by during this period of time. Again, we've got two really important unemployment programs that are going to come to a halt unless they're extended. And so I'm concerned that we may see that start to shift. Also, yeah, sure, we've got cash, but I think it's going to take a while before people are really going to go out there. I think it's going to take us, probably the good part of all of next year to get everybody vaccinated, especially if we have the folks that are hesitant. And so then, can you really go to a conference? Do you really want to get in an airplane? Because you don't know who's been vaccinated, who isn't, we won't know how effective the vaccination really is. We've got 2 months. That's to get approval. It needs to be effective for a couple of months. We don't have 6 months, a year of how long is this going to last? Could you get it again, even if you've been vaccinated? So there's some big questions, and I think that will keep people hitting the brakes. And the last piece that I'm concerned about is student loan debt. There was a lot of student loan debt deferral this year because of the CARES Act, and there is an expectation there is going to be a tremendous amount of default. There are going to be students who do not make it back into a for-profit or community college who took on debt and are really struggling and may default on that student debt. So I think that's something that we're going to have to watch because it's a pretty big number. It's not as big as what do I want to say, the prime, subprime
2008, 2009. Yeah.
But it is a big looming number. So I'd say that,
$2 trillion, I think, is the number. Right?
Yeah. I mean, but they're thinking, I think, what is it, 400 million may default, something like that. So I think that's something to watch. So I just think this whole thing is going to take a little bit longer to play out than I think you're thinking. And I might be wrong.
Well, yeah. I mean, who knows, right? Those are some good points And they might be the systemic things that, cripple the economy that nobody sees coming. That's usually how these things work, right? We're talking about stuff that could happen maybe not next year, but 5 years down the road.
Yep.
I think the fact that my last point was going to be that we have a vaccine, and that gives us hope. And I'm hoping that also applies to some of the stimulus that we might see. There's two important programs around for small businesses and unemployed people primarily that are ending at the end of this year. They're like in the literature. You cannot pay out any more money past, I think it's December 26th. So I'm hoping the fact that we have a vaccine coming will let Congress know and the lawmakers know that there is an end in sight. We don't know exactly when it's going to be. Maybe it takes all of 2021, but it's not this unending problem that we didn't know when it was going to finish a couple months ago. We had no idea how long this was going to drag on for. So I think that's giving me some hope and reason to be optimistic in 2021.
Well, yeah, I mean, and to your point, we wrote our last quarterly newsletter was an issue on hope, which we really felt people needed. When you start to lose hope, everything looks bad. When you've got hope, you start to see things differently. And there is no doubt that the vaccine news is really good. I'm hopeful we have a good plan for distribution. What's also interesting, as I said earlier, is that the vaccine is being made a different way, more using what we know about genetics. So I'm hopeful that means that we may have less of the side effects or problems that often come with massive, population vaccination. So yes, I think there's a lot of reason to have hope. There's one thing I want to point out though, that I think we cannot possibly understand yet. And that is that all the businesses who took PPP, Paycheck Protection Program money, if they are able to get that forgiven, it's because they had a certain amount of expenses that they use, payroll and things like that, qualified expenses that they use that for. Well, what that also means is that they cannot deduct those expenses on their tax return. And I am tremendously worried that we're going to have a whole bunch of small businesses come next April all the way to October who did not have good tax counsel, who did not do the right math, and now they have some big debt owed to the federal government, which, maybe they got all the way through to March or April and survived, and now the weather's getting better, but now they get the tax bill and it does them in. And so that's going to be something I think we're going to need to watch. That there's no way for us to know how big of an impact it's going to be. So I'm worrying about those are more economic versus health. I think the health front looks positive. I think the economic side, the jury's still out. I think the markets, you never know, but certainly in the short term, they're looking awesome. But you need to stay well diversified. We still believe in having cash and bonds and portfolios, and taking the long-term approach, right? Having the long view is absolutely critical in these times.
Especially when it comes to investing. The fact, like today, for example, we are having the highest number of cases we've had all pandemic, and we just crossed the 30,000 border on the Dow. That gives people reason for concern, but I think that's how investing goes. We've been counseling clients, they're not connected. We just did a whole segment on it. I think when it comes to investing, have a plan, talk to an advisor. Those things are always true.
Absolutely. Well, so we're doing this live, so we welcome from any of you who are listening in live with us, any questions that you want to ask. If you just go to the bottom of your square here, you'll see you can either do Q&A, raise your hand, or put something in the chat box if you have any thoughts, if there's something we missed that you were curious about.
So we'll give a couple minutes to see or a couple seconds to see if anybody has any questions. Maybe you can just touch on a little bit what clients might be expecting. We had Kathy Frakes on last week. She talked about some of the tax planning stuff. What can people be expecting to hear from us in the coming days?
Yeah, so I mean, we're right in the middle of this over the next 2 to 3 weeks, working on pulling together all of the information on realized gains and losses, expected capital gains distributions and income, and coordinating with our clients' CPAs to try to avoid surprises in April. You know, sometimes it's hard to do that, but we are very, very focused on the tax planning. We think it's one of the most important values that we add as financial planners with our clients. And so we're going to be working hand in hand with our clients, with their advisors, and working on a lot of year-end action. I think, you know, Kathy was talking about, you know, being sure to do the tax planning, because how things may have looked for you in 2019 may be very different in 2020. We think there's some opportunities depending on your income and gains situation for Roth IRA conversions, setting up, contributing to donor advised funds, taking highly appreciated. One of, I think, the biggest opportunities for those of you who have tired of oil stocks, you know, they've always paid great dividends. Those dividends may have lagged some. This year, oil stocks really got killed. But you've had a big gain. You want to get them, take them out of your portfolio, but you don't want to recognize the gain. That's where, if you can donate that directly to a charity or into a donor advised fund, that can be a great strategy. Obviously, you need to coordinate with your tax advisors for sure. We've got a question from one of our viewers here talking about, what are your thoughts on inflation in 2021 or throughout the 2020s? So this is a good one, because we may have some different views on this. What do you think, Jared?
Yeah, I mean, look, if you read any like economics 101 textbook, I think it would tell you, if you get this level of stimulus, this injection of cash that we've seen both from the Federal Reserve and then on the stimulus side from Congress, you shouldn't expect inflation. That, I mean, inflation has kind of eluded a lot of the economists and ivory tower professors for the past, I don't know, decade. And when we've expected to see inflation, we haven't got it. So, I mean, I don't know what's going to happen with inflation. You would expect it to rise, of course, but who really knows at this point? I think it will be a good test case for one of the theories out there, monetary theory, about, you know, the government really doesn't have to worry as much about taking on debt. When they do, it gets the benefits pass on to individuals, so it's maybe not a bad thing. I think that idea is going to be important to look at. We've lost a number of jobs. How many of those jobs are gone for good, and how do we take care of those people, whether it's through universal basic income? Andrew Yang ran his presidential campaign and got maybe some more traction than you would have expected from him around that single idea. So is that something that takes off in the future? I think it's really interesting.
I think what's also different, and you know, I think Janet Yellen will be working closely with whoever the Fed chairman is. You know, I think that it could easily be Powell. I think they're going to work well together because they have the same views about economic equality. And there's a, you know, that's a whole other thing we can talk about. But I think, you know, the Fed has already committed, they're going to let inflation run past the old 2% mandate. And the question will be, how far can they manage that if it starts to spike up? It doesn't even matter. I think a lot of people are focused on inflation because they're worried about the debt that we're carrying. And again, to your point, modern monetary theory would say that's not really an issue. So that may not be what causes us to move into an inflationary period. We may just get overheated, pent up demand to spend, right? That could drive prices up as well.
Yeah, and I think the debt it's an important conversation, but the interest rate, the carrying cost on the debt right now is very low.
Yep.
So it's going to be an important topic that maybe one day we address. Who really knows? We've had a balanced budget in this country a handful of times, ever since I've been consciously paying attention to the news. But I think the last time was under Clinton. So who knows?
And that didn't work out well. I mean, so you can, when you start to look at things, it is better for the government to carry the debt than us to carry the debt as consumers, because we cannot create our own currency, only they can. So yeah, that's something, I mean, I know people are worried about it, and believe me, in our financial planning assumptions, we're always concerned about inflation, and we tend to be conservative about that. We're assuming a higher rate than where inflation has been over the last couple of years. I do have another question here, and that is it true that one cannot turn an inherited IRA into a Roth IRA? That is correct. You can do that with traditional IRAs, move them to Roth IRAs, and we are definitely working on that with some clients. But if you've inherited an IRA from a family member, you cannot do a Roth conversion.
That made me think of a good idea. You know, the Secure Act happened at the beginning of the year. We probably would have spent a lot of time talking about that with our clients had we not had a global pandemic, but there were a lot of changes to retirement laws out there. The biggest of which, I think, RMDs for a lot of people moved from 70 and a half when you have to start taking them to 72. That's an important note. And there's
that might change.
That might change. We might see it go back.
Yeah, stay tuned.
But around inherited accounts, there are a number of changes. So if you have an inherited IRA that you're coming into, I think everything else out there is grandfathered in. But if you have a new one, it's important to work with a planner around that.
Any other questions out there? I appreciate people putting in questions and putting things into the chat box. It has been quite a year, and you know, one of the things we'll be talking more about too as we move forward is what we call ESG investing, environmental, social responsibility, and corporate governance investing. Globally, this is a global trend, global corporate trend to demand more of companies and consequently stocks and then stock investments. And so, you know, we'll be talking more about that. I think with a Biden administration, that will probably have more fuel and energy, right? I think we're
just talking about that before we started recording, right? John Kerry.
Yep, exactly. So who knows where that's going? So there definitely may be some shifts in sectors that is not uncommon in with a change of administration to see those kind of sector and industry changes. So I definitely want to stay tuned, stay flexible, I think is key as well. I don't see any other questions or anything else in the chat. So if you want to go ahead and wrap it up, Jared, I think we can do that. And I'll just say happy holidays, happy Thanksgiving. We're so grateful that you've joined us for a live Bridging the Gap. We hope you'll check us out in the future, but go ahead and wrap things up.
Yeah. Thanks again for everyone joining. Happy Thanksgiving. We'll be closed, obviously, for the holiday, and we'll be back at it next week. So thanks for tuning in.
Take care.